5 reasons why trades flop. Number 1, failure to diversify. Investing in one particular market or an asset can lead to significant losses. This is why it's important to diversify, and also important not to spread too thin. Never put all your eggs in one basket. Number 2, not having a proper exit strategy. Not having a plan when to exit your trade or not executing that plan properly can lead you to big loss. You need to learn to take profits as well as learn how to take a loss. Become comfortable with both. Number 3, lack of proper research and analysis. Without a thorough understanding of the market conditions, industry trends, and the company or asset being traded, it's very difficult to make informed decisions and maximize returns. That's why it's very important before you begin trading or investing to do your research and your analysis. Number 4, not having a proper risk management strategy and overleveraging. These two go hand in hand, and if you don't know how to manage them, you can set yourself back so far that it will be very difficult to recover from your losses. You need to learn how to manage your risk versus reward ratio, as well as learn how to balance your wins versus loss ratio. Remember, never lose your profits from a previous trade or a previous day, depending on your strategy. Number 5, emotion-based decision-making. Fear, greed, and other emotions can lead to impulsive and irrational trading, which does not align with a sound investment strategy. Before you begin trading or before you begin your day, make sure that you're clear-headed and ready for the day. And you need to know what is your goal, as well as follow your strategy religiously. And of course, adapt your strategy if the market conditions change. I hope you have learned something new today. Until next one.